What if I told you that every single day, trillions of dollars are traded in a market that most beginners don't fully understand, yet it's one of the most popular ways people try to make money online? That market is called Forex. And if you've ever seen people talking about currency pairs like euro to US dollar, pound sterling to US dollar, or saying things like buy the dip and sell the breakout, but had no idea what any of it actually means, don't worry. In this video, I'm going to explain what Forex trading is, how it works, and why so many people are interested in it, all in the simplest way possible. So if you're a complete beginner, this video is for you. Let's get into it. What is Forex trading? Forex stands for foreign exchange. In simple words, Forex trading is the process of buying one currency and selling another in order to make a profit from changes in their value. Think about it like this. Imagine you travel from one country to another. If you're going to Europe, you might exchange your local currency for euros. If you're going to the UK, you might exchange it for British pounds. That currency exchange is part of the Forex market. But traders aren't doing it because they're traveling. They're doing it because they believe the price of one currency will move up or down compared to another currency, and they want to profit from that movement. So at its core, Forex trading is simply speculating on currency price movements. Currencies are traded in pairs. One of the first things beginners need to understand is that in Forex, currencies are always traded in pairs. For example, euro to US dollar, euro against the US dollar. Pound sterling to US dollar, British pound against the US dollar. US dollar to Japanese yen, US dollar against the Japanese yen. Now you might be wondering, why pairs? Because when you trade Forex, you're not buying just one currency by itself. You're always buying one currency and selling another at the same time. Let's use euro to US dollar as an example. If you believe the euro is going to become stronger than the US dollar, you would buy euro to US dollar. If you believe the euro is going to become weaker than the US dollar, you would sell euro to US dollar. So when you trade Forex, you're basically making a prediction about which currency will perform better against the other. How Forex trading works. Let's make this super simple. Imagine the price of euro to US dollar is 1.1000. That means 1 euro is worth 1.10 US dollars. Now let's say you believe the euro will get stronger, so you decide to buy euro to US dollar at 1.1000. After some time, the price moves up to 1.1050. Since you bought at a lower price and the market moved higher, you could close the trade and make a profit. But if the price drops instead, let's say it falls to 1.0950, then you'd be in a loss. That's the basic idea of Forex trading. You try to predict whether the price will go up or down. If you think price will go up, you buy. If you think price will go down, you sell. And if the market moves in your favor, you make money. If it moves against you, you lose money. That's the game. Why do Forex prices move? Now the next big question is, why do currency prices move at all? The answer is simple: supply and demand. If more people want to buy a currency, its value can go up. If more people want to sell it, its value can go down. But what causes that buying and selling pressure? Usually things like economic news, interest rate decisions, inflation data, political events, central bank announcements, global market sentiment. For example, if the US economy is doing very well and investors expect the dollar to become stronger, demand for the US dollar may rise. That can cause certain Forex pairs to move. This is why Forex traders often pay attention to economic calendars, major news events, and market sentiment. Who trades Forex? A lot of people think Forex is only for professional traders sitting in banks or huge financial institutions. And yes, banks and institutions are a huge part of the market. But they're not the only ones trading Forex. The Forex market includes banks, hedge funds, governments, international companies, And retail traders, regular people trading from their laptops or phones. So whether someone is trading with a massive institution or with a small personal account, they're all participating in the same global currency market. Why is Forex so popular? So why are so many people attracted to Forex trading? There are a few big reasons. 1. The market is open 24 hours a day. Forex runs 24 hours a day, 5 days a week. That means people in different time zones can trade at different times, which makes it very flexible. 2. You can trade rising and falling markets. In Forex, you don't need the market to only go up to make money. If you think a currency pair will fall, you can sell it and potentially profit from the downside too. 3. It's easy to access. Today, you can start learning and trading Forex from your computer or even your phone. That's one of the reasons it has become so popular worldwide. 4. There are constant opportunities. Because currencies are always moving, traders can find setups in different market conditions, whether the market is trending, ranging, breaking out, or reversing. But here's the truth, Forex is not easy money. This is the part many beginners need to hear. Forex is not a guaranteed way to make money, and it's definitely not a get-rich-quick system. A lot of new traders come into the market thinking they can double a small account in a few days. That mindset usually ends badly. The truth is, Forex can be profitable, but only if you take the time to learn it properly. Because just like you can make money when the market moves in your favor, you can also lose money when the market moves against you. And if you trade without understanding risk, emotions, or strategy, losses can happen very quickly. That's why successful trading is not just about finding entries. It's about education, discipline, and risk management. What should beginners learn first? If you're brand new to Forex, don't try to learn everything in one day. Start with the basics. Here are the first things every beginner should focus on. 1. Learn how currency pairs work. Understand what you're actually trading and how pairs move. 2. Learn the difference between buying and selling. Know what it means to go long and go short. 3. Understand pips, lots, and leverage. These are basic Forex terms that affect profit, loss, and position size. 4. Learn to read charts. You don't need to become an expert overnight, but you should understand how to read price movement and basic candlesticks. 5. Study risk management. This is one of the most important parts of trading. Even a good strategy can fail if your risk management is bad. The smart way to start Forex. If you're serious about learning Forex, here's the smartest way to begin. Don't rush straight into live trading with real money. Instead, learn the basics first. Watch educational content. Practice on a demo account. Study how the market moves. Test simple strategies. Learn to control risk. And most importantly, be patient. In the beginning, your goal should not be to get rich fast. Your goal should be to understand how the market works and avoid the mistakes that wipe out most beginners. Final thoughts. So, what is Forex trading? Forex trading is the process of buying and selling currencies to profit from changes in exchange rates. Currencies are traded in pairs, and traders try to predict whether one currency will rise or fall against another. It's a huge global market with a lot of opportunity, but it also comes with risk. If you want to succeed in Forex, focus on learning first. Build your knowledge, understand risk, practice patiently, and treat trading like a real skill, because that's exactly what it is. And if you want, the next step after this is learning topics like candlestick patterns, support and resistance, risk management, and beginner Forex strategies. Those are the things that will help you move from simply understanding Forex, to actually reading the market with confidence. Thanks for watching, and I'll see you in the next video.